Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Welcome, everyone. This is Steve Meisinger, your host with the ISE webinar series. And tonight, unfortunately, Tim Bigham couldn't be with us, but we do have Jason Ayres. And for those of you that don't know Jason is the founder of OptionSource.net, and Jason presents the ISE FX Options Weekly Outlook. So Jason looks at the currency pairs, and he gives us his view of what's going on in the market. So I'm really pleased that Jason was able to fill in at the last moment. It was really nice of Jason. So we're going to have a little bit different format tonight, but I hope you find this format to be something that's very valuable to you. I'm going to present FX option volatility for about 20 minutes or so. And then Jason, of course, as I said, the founder of OptionSource.net, will talk about some of the pairs that have been the most volatile recently. And again, he presents this weekly outlook each and every week, but you're getting sort of a fresh look at it as he just produced this, I should say, just yesterday, and so really this is quite fresh material. So why don't I get started? And Jason, thanks for being with us. I just want to introduce you as the founder of OptionSource.net, and I want to thank you again for joining us on such short notice.
Good stuff. Yeah, thanks for having me on this evening. Happy to be here. No question.
Oh, thanks, Jason. All right, so this is what we're going to do. I'll present some slides, and then Jason's going to take control, and he'll be talking about what's going on in the current markets and how you can look at these volatilities. And volatility is definitely so important, but you can find option strategies that mitigate a lot of that volatility, and we'll take a look at some things. So options, of course, are not for everyone, but again, you can go to it's actually optionseducation.org, or you can call 188-OPTIONS to learn more about options. So the likelihood of events, that's really what we're talking about. We're seeing some really wild days in the market as the currency markets are really, really stressed out right now. So when I think about what is happening in the markets, I think about probabilities. And again, I don't ever talk in terms of guaranteed or a term called or word used as impossible. I use other words such as most likely, unlikely, probable, improbable, but I'm not going to ever say it's impossible. So the options pricing model allows you to have a more quantifiable solution, and that's what many option traders use to sort of understand what should happen to an option price given a certain set of events. So what happens each and every day in the FX market? Well, we're seeing news coming out each and every day. The Japanese market, Asian, I know Japan's down quite a bit already as I speak, but the futures in the United States are about unchanged, so we'll see how that all plays out. But we have a sequence of events, so some news occurs, then we always have uncertainty. What does it mean for the market? And then how are the options going to move? Volatility is going to move up and down. Simultaneously, the exchange rates are going to move, and at some point, and Jason's going to talk about this, the technicals are going to find a new area of equilibrium. And of course, they're finding that each and every second, but sometimes it's very difficult to find that equilibrium, and that's why we see prices move up and down. So more on that in just a brief few moments. So where did the prices come from? Well, way back when, in the early 70s, Black and Scholes developed the most popular pricing model, and whether it's currency options, equity options, or any other kind of options, the concept is that it's based on assets moving around. Of course, we know that each and every day, that assets are moving. So the assumption is that you can create risk-free situations. That's, of course, we've had some challenges with that recently. Many models out there. Black-Scholes is probably the most common, but Garmin-Cohagen is probably the most common for FX options. So why would you care about these models? Well, it helps quantify how much my option should move based on an underlying exchange rate. That's why it's really important. And it also assumes, and many of us may not assume this, or may not believe in this assumption, I should say, that prices are random. You know, for some of us, we look at these trends, and Jason's going to show us some charts and say, you know, doesn't this look like there is some trend here? And if you believe in that, then you have an excellent opportunity to trade, because the option market, believe it or not, does not believe in trends. It believes that it's a random market, and it's just as likely to move up or down each and every trading day. So that sort of leads me to the efficient or not. Well, the efficient market hypothesis assumes that the market is fully reflecting all available information, and that's where when people first start studying whatever market you're looking at, you sort of believe in this. At least I did. But then when you live and breathe the markets for many years, you say, well, okay, that's great, efficient market, but you know, how can it be efficient if, let's say, the U.S. equity market or even the world markets are down about 50% this year, roughly, depending on the index you look at? Some currencies are up almost 50%. Some are down 80%. In Iceland, we know the currency has devalued quite a bit, so obviously you're going to get periods of excess volatility, bubbles, chaos. So the way you understand options is through what are called normal distributions. So I just used American women's heights here, said, okay, the 18 to 24, I took this example and said, okay, if the average woman is about 65.5 inches, well, I could figure out an error factor from that, about 2.5 inches, and about 68% of all women are going to be plus or minus that 2.5 inches, or between 63 and 68 inches. And 95% of all women, according to statistics, would be within that double range, or that 2.5 times 2, 60.5 to 70.5. So we can say, well, with 95% certainty that most women are going to be between the heights 60.5 and 70.5 inches. I know that for those of you that are in places that use metrics, it's not really important that it's inches or not. It's just the number itself. So the average woman would be somewhere there, right there on the mean score. Taller women would be all the way to the right, shorter women all the way to the left. Okay, this is all good stuff. And you're probably thinking, what is Steve Meisinger doing here? You know, he's with the ISE, he talks about options, and he's talking about women's heights. What does that mean to me, the person that's trying to trade FX options? Well, probabilities matter for FX options. So today's exchange rate is going to be right there at the top of the curve. And you can see that on slide 8. So the essence of options is the option investments are about forecasts. That really is up to you. Jason produces the weekly outlook, though, so he can help you with support, resistance. You may have your own views, but at least you want to understand, Jason really understands what these technicians are looking at, and that's what he's really telling you each and every week. I'd urge you to sign up for the FX Weekly Outlook, as Jason does an incredibly good job in what he calls his focal zones, his focal points, and selecting support and resistance. At least that's what the market is looking at. So when you're trading ISE FX options, you're looking at what is the dollar really worth. So it's the dollar in the numerator. And recently in 2008, we've seen a U-turn from the U.S. dollar being sort of under a selling siege to now the U.S. dollar being in very much great demand. And the features of the ISE FX options are just options on the exchange rates. They're U.S. dollar based with 50-cent strike prices. The premium is quoted in U.S. dollars. They're a European exercise, which means you can't exercise them early. But you know what? This product's great because it's cash settled. You don't have to worry about having to deliver Japanese yen or Swiss francs. Whatever you're trading, it's going to settle into U.S. dollars at the noon settlement on Option Friday, at the noon buying rate at the Federal Reserve Bank of New York. You can trade them through your conventional options brokerage account, and they're continuously quoted by market makers. Trading hours at 9:30 to 4:15 Eastern Time. So options give you choices.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.